Hello and welcome everyone to Gold Asset of the Day for the 21st of July 2021, presented by myself, Phil Carr, at the Gold and Silver Club. So as we continue throughout this week, what do you need to be aware of here? So in the last week, we have seen hedge funds and money managers, they've increased their overall net long position on gold by 2% in the last week. In fact, out of hedge funds who do have a position, 73% are long. And this has really been staircasing higher over the last few weeks. We've seen this consistent inflow from banks, hedge funds, money managers and institutions, particularly at the beginning of July when we saw the Basel III regulation come into effect. And of course, we started the third quarter. During that week, gold prices, they dropped down to $1,750 per ounce. We obviously identified that with you as being a great opportunity to build into further positions. Last week, gold prices, they broke out to 1 month highs, hitting $1,833 per ounce. Alongside gold, where we've banked a lot of profits, we've also capitalized on platinum in the last week, banking 2,300 points of profit. So of course, for every one lot that you would trade, that's $23,000 of profit. For every 10 lots that you would trade, that's $230,000 of profit. As you mentioned on the week ahead commodity report, we were expecting a range back down towards the 1790s this week, but that would present a great buying opportunity for you. Very quickly over the last 24 hours, after 1794 was tested just on Monday, gold prices traded back above $1,817. Ultimately, we remain with our long position on gold. I'm still looking at that range for this week. So essentially the 1790s up towards last week's swing high of 1833. In fact, I'm looking for that level to get taken out by the end of this week. So just bear that in mind that we discussed this with you again on the week ahead commodity report. Feel free to go back and watch that from the weekend, the exact ranges that we were looking at for gold. So far, everything has played out exactly as we mentioned there. Retest back down towards the 1790 level that would get a bid, get support, and we've already seen gold prices break out to 1 week highs yet again here. What I would also look out for later on in the week is the European Central Bank announcement on Thursday. That can be a catalyst for massive moves, not only on the day, but the following day on Friday. I would look out for further big moves in the market, particularly the metals. Then next week, everything is going to lead up to the FOMC statement, which will be on next Wednesday. So those are going to be the two major news items to look out for over the next week. Two central banks giving updated monetary policy guidance, especially the European Central Bank. This week on Thursday, Christine Lagarde's press conference afterwards will be very closely watched, and that can provide explosive moves for the commodity markets. As you know, commodities, they don't move up in a straight line. These sell-offs, pullbacks we've seen this week is just a great gift, an opportunity to yet again come in, buy at the lows and capitalize on the slingshot moves higher that we've already seen, in fact, on gold at the beginning of this week. And again, you want to really avoid these outdated, gimmicky technical strategies where you just end up FOMOing in, buying at the top, getting taken out on the retracements. You'll get chopped up a lot. As you know, technical analysis does not work. You're going to save yourself a lot of time, money and effort by learning the right approach to the market. Otherwise, you're going to be stuck in the same situation in 3 months, 6 months, 12 months. You're going to waste a lot of time learning outdated technical strategies which just simply do not work. In 2021, you need a lot more edge than that. This is where you want to be utilizing a professional approach to the market, utilizing understanding of daily, weekly, monthly, quarterly cycles, understand the capital flows. Alongside that, marry that up with the sentiment in the market, the intermarket correlations, the ratios, key areas of liquidity, understand macroeconomics, the key drivers, supply and demand dynamics, and alongside that, of course, understand what the hedge funds, money managers, banks and institutions are doing, how they're positioning themselves in the market. That will help you massively to get an edge. So with that, if you would like to join our community of successful traders, learn the research-driven approach to the market and join our professional mentorship program, there is an opportunity for you to do so. Just make sure you click in the link below today's report in order to make an application to join our professional mentorship program.